If XLM or HBAR hits $5, what is your specific holding actually worth? Not a big range, not a hopeful estimate. Exactly. Because most people holding these assets have never done this math properly, and the numbers, when you actually run them against the real on-chain holder distribution data, are more interesting and more honest than most videos about these assets ever get. So, that is what this video is. Real wallet tier data, real supply numbers, real market cap requirements for each scenario, and then the exact dollar value your specific tier produces at $5 per token. By the end, you will know precisely where you stand on the global holder distribution for each of these two assets, what $5 actually requires for each of them in terms of market cap, and whether those two requirements are in the same category of plausibility or completely different ones. So let me start with XLM, because the data here is the most complete and the most surprising. The AmiaWhale.com tracker, which pulls live from the Stellar network and was updated as recently as June 30th, 2026, shows the following verified distribution. Shrimp tier, under 1,000 XLM, that is 10,291,128 wallets. 10.3 million wallets holding less than 1,000 XLM. Each, that is 95% of all XLM wallet addresses globally. Let that number land for a second. If you are holding more than 1,000 XLM, you are already in the top 5% of all XLM wallet addresses in the world. Not 5% of crypto investors broadly. 5% of the 10.8 million wallets that have ever held any XLM. Fish tier, 5,000, 50,000 XLM, 188,166 wallets. This is the range where a lot of people watching this video probably sit. If you hold somewhere between 5,000 and 50,000 XLM, you are in a group of fewer than 200,000 wallets globally. That sounds like a lot, until you remember there are 8 billion people on Earth. Less than 200,000 of them hold 5,000 XLM, and you are in the top 1.7% of all XLM wallet addresses in the world. Dolphin tier, 50,000 to 500,000. XLM 27,607 wallets. If you hold 50,000 XLM, you are in a group of fewer than 28,000 wallets on a network with over 10 million addresses. That is the top 0.26% of all XLM holders on Earth. Less than 3 in 1,000. Shark tier 500,000 to 5 million XLM. 1,756 wallets globally. If you hold 500,000 XLM, you are in a group of fewer than 2,000 wallets, top 0.02% of all XLM addresses in the world, whale tier, 5 million to 50 million XLM 198 wallets. Before we continue, if you enjoy this type of content, don't forget to subscribe to my channel. Now let's get back to the topic. If you hold 5 million XLM, you are one of fewer than 200 wallets holding that amount on the entire Stellar network. That number sounds absurd until you realize what 5 million XLM costs at today's price of approximately 20 cents. $1 million. You do not land in the whale tier by accident. Now, the number that the verified data confirms, and that a May 2026 YouTube video specifically cited based on on-chain analysis, 16,000 XLM puts you ahead of 99% of all wallet addresses globally. 16,000 XLM at today's 20-cent price is $3,200. $3,200 puts you in the top 1% of all XLM holders on Earth. That is the single most important number in this video for most of the people watching it. Now, the $5 scenario, XLM's current circulating supply is approximately 30 billion tokens. At $5 per XLM, the market cap would be approximately $150 billion. For context, XLM's all-time high market cap was approximately $19 billion in January 2018. So $5 is roughly an 8 times increase over the previous all-time high market cap. It would require XLM to be worth more than any crypto asset other than Bitcoin and Ethereum has ever been worth in this market's entire history. Is that possible? Yes. Is it the base case? No. But it is a specific, calculable scenario that happens if the DTCC integration goes live as planned in the first half of 2027. If the institutional tokenized securities market on Stellar grows towards the scale of what the DTCC processes annually, and if the market begins pricing XLM as settlement infrastructure for U.S. securities rather than as a speculative crypto asset, the gap between speculative crypto asset priced at $6 billion market cap and settlement infrastructure for a tokenized securities market of any meaningful scale is enormous. Whether $5 is where that gap closes or whether the market settles at $1 or $2 or $10 depends on execution timelines and institutional adoption velocity that cannot be predicted with certainty. Here is what each tier is worth if XLM reaches $5, shrimp tier under 1,000 XLM at $5. Your position is worth under $5,000. Meaningful but modest. Fish tier at the lower bound, 5,000 XLM at $5. That's $25,000 from a current value of $1,000. That's a 25 times return on an investment most people in this tier made at various prices. Above and below today's fished, here at the upper bound, 50,000 XLM, currently worth $10,000 at today's price. That becomes $250,000. Dolphin tier at the lower bound, 50,000 XLM at $5. That's $2.5 million. Dolphin tier at the upper bound, 500,000 XLM at $5. That becomes $2.5 million. Shark tier at the lower bound, 500,000 XLM. $2.5 million at $5 per token. Shark tier at the upper bound, 5 million, $25 million. The reason those numbers feel meaningful is because most of the people sitting in the fish and dolphin tiers got there at prices that are not dramatically different from today's. A lot of fish tier and dolphin tier XLM holders accumulated between 10 cents and 50 cents. Their cost basis is not zero, but it's not dramatically higher than the current 20 cents price either. Let me also give you the tier values at $3 per XLM because I think $3 is the most useful intermediate scenario. It requires a $90 billion market cap for XLM, which is roughly 5 times the previous all-time high market cap. And it's the kind of level that would represent a major cycle but would not require the full DTCC tokenized securities re-rating to play out. At $3 per XLM, 5,000 XLM fish tier becomes $15,000 from a $1,000 investment today. 50,000 XLM becomes $150,000 from a $10,000 investment. 500,000 XLM Dolphin tier becomes $1.5 million today. 5 million XLM Shark tier becomes $15 million. These numbers are meaningful, and they do not require XLM to be priced as the settlement infrastructure for the entire U.S. securities market. They just require XLM to be priced as a leading compliant payment and tokenization network in a strong alt season. Something it has already done once, at the $1 level in 2018, with far less institutional validation than it has today. And there's something structurally important happening for XLM right now in 2026 that's worth naming. On July 8th, 2026, 2 days ago from the time of this recording, Clearstream, which is Deutsche Börse Group's post-trade services provider and a major European financial infrastructure institution, serving approximately 2,500 institutional clients, added XLM to its institutional crypto custody service. This happened in direct response to MiCA compliance demand. When a Deutsche Börse-owned MiCA licensed custodian adds an asset to its institutional custody service, it doesn't do it for any reason other than demand from institutional clients who need access to that asset through a regulated custodian. That demand was there. Clearstream responded to it, and the institutional XLM holder base, which now has access through Clearstream's Luxembourg-based custody infrastructure, just expanded. The Clearstream addition matters for the holder tier analysis, specifically because of how it changes the demand side of the distribution. Most of the 10.8 million XLM wallet addresses are retail wallets, individual holders who will buy or sell based on price, momentum, sentiment, news cycles. Institutional custody through Clearstream represents a different kind of holder, one that takes positions through regulated infrastructure, holds through volatility because the mandate is long-term, and doesn't panic sell on a bad week. Every institutional holder that moves XLM into Clearstream custody is a holder that is structurally less likely to be the seller that caps a price rally. That matters for everyone sitting in the fish, and Dolphin Tiers, who has wondered whether the institutional validation Stellar is accumulating, actually translates into the price environment where their position achieves the tier values I just described. Now, HBAR, and I need to be honest about something before we go through the HBAR $5 math, because the conversation about HBAR and $5 is different from XLM and $5 in a specific way that matters. HBAR's total maximum supply is 50 billion tokens, not 30 billion like XLM, 50 billion with a circulating supply of approximately 43 to 44 billion at $5 per HBAR. The market cap is approximately $215 to $220 billion. That's not 8 times the previous all-time high market cap the way $5 is for XLM for HBAR. $5 is roughly 40 times the asset's previous all-time high market cap of about $5 billion. So reached when HBAR hit its all-time high of 57 cents in September 2021, 40 times the previous all-time high market cap. I want to say that clearly, rather than bury it, because I think holders of HBAR deserve to understand what they are actually rooting for when they think about $5 HBAR. That doesn't mean $5 is impossible for HBAR. Crypto has produced 40 times all-time high market cap expansions before, but it means the conditions required for $5 HBAR are not the same, are more extreme than the conditions required for $5 XLM. $5 XLM requires Stellar to be priced as institutional settlement infrastructure, $5. HBAR requires HBAR to be priced as the settlement and finality layer for a significant portion of the multi-trillion-dollar tokenized real-world asset market at a scale that dwarfs everything the asset class has historically achieved. That is a much more aggressive extrapolation. There's also a structural consideration for HBAR specifically that the CoinStats AI analysis named directly and that I want to put in front of you honestly rather than glossing over it. Enterprise clients using Hedera's network may not need to purchase HBAR on the open market to use the network. If enterprises acquire HBAR through the Hedera Foundation's ecosystem grants, or if their usage is subsidized, the connection between network usage growth and open market HBAR price appreciation is weaker than it might appear. This is not a flaw unique to Hedera. It is a structural challenge for any enterprise-focused network, where the token demand from enterprise usage is not automatically equivalent to open market buy pressure. It means that Hedera's extraordinary enterprise metrics, $10 billion in processed RWA settlements, Google and IBM and FedEx on the governing council, 140% year-over-year growth in daily active wallets do not automatically translate to a $5 HR price without the specific mechanism of sustained open market demand for the token itself. The mechanism that would change this is the ETF. The Canary HBAR ETF has already accumulated approximately 473 million HBAR, roughly 1% of total supply through open market purchases. Unlike an enterprise acquiring HBAR at subsidized rates, ETF inflows require the fund to buy HBAR on the open market at whatever the prevailing price is. $93 million in net inflows, with almost no outflows since October 2025, means $93 million of open market HBAR demand. That did not exist before the ETF launched. If ETF inflows grow, if additional institutional investors allocate to HBAR through the Canary product or through future ETF products, the open market demand mechanism strengthens in a way that directly connects to price. That is the specific thing to watch for HBAR holders thinking about whether the $5 scenario is reachable, not the number of enterprise partnerships, the ETF inflow weight, because that is the mechanism that actually creates the open market demand that closes the gap between Hedera's institutional metrics and HBAR's price. With all of that said, honestly, let me add the $3 scenario for HBAR before the $5 tiers, because $3, which requires approximately $129 billion market cap, is still an extreme scenario for HBR, but a less extreme one than $5, and useful as an intermediate reference. At AT $3 per HBR, $1,000 HBR becomes $3,000. From a $70 investment today, a 43 times return. $10,000 HBR becomes $30,000 from a $700 investment. $100,000 HBR becomes $300,000. $500,000 HBR becomes $1.5 million. $1 million HBR becomes $3 million. With all of that said, honestly, here is the HBR tier analysis for a $5 scenario. Hedera has approximately 9.78 million accounts created. The Canary HBR ETF currently holds approximately 473 million HBR. That is meaningful for the holder tier context, because those ETF holdings represent a single institutional vehicle holding a large position on behalf of multiple investors. A 1,000 HBR position, roughly $70 at today's price of approximately 7 cents, at $5 is $5,000. That is a 70 times return from today's price. 10,000 HBR, approximately $700 today, at $5 is $50,000. That is the kind of return from a sub-10,000 investment. That sounds extraordinary until you compare it to what the market cap would have to be to produce it. 100,000 HBAR at $5 becomes $500,000. 500,000 HBAR becomes $2.5 million. 1 million HBR at $5 HBR. Here's what makes the HBAR tier math interesting in a different way from XLM. Because HBAR's price is lower and the maximum supply is larger, you can accumulate more tokens for the same dollar amount than you can for XLM. $1,000 buys approximately 14,300 HBAR today. The same $1,000 buys 5,000 XLM at $5. Those 14,300 HBAR are worth $71,500. Those 5,000 XLM are worth $25,000. So if $5 is equally achievable for both assets, which is a big if for the reasons I explained, HBAR produces a higher absolute return from the same dollar investment at today's prices. That is the mathematical argument for HBR at these price levels. The question is whether the supply and market cap requirements make $5 equally achievable. And I've already been direct with you about the fact that they do not. There is a more realistic near-term scenario for both assets that I think is actually more useful for most holders than the $5 scenario. Let me give you the tier values at $1 per token for each asset. Because $1 for both XLM and HBAR is a scenario with more historical and structural support than $5. XLM at $1 requires a market cap of approximately $30 billion. XLM's previous all-time high market cap was approximately $19 billion. $1 is not an unprecedented multiple. At $1, shrimp tier under 1,000 XLM becomes under $1,000. Fish tier at 5,000 XLM becomes $5,000. 50,000 XLM becomes $50,000. Dolphin tier 500,000 XLM becomes $500,000. These are the numbers that the Fish and Dolphin tiers, the 200,000 wallet holders, who make up most of the XLM community watching this, should probably be working with as a realistic base case rather than $5. HBAR at $1 requires a market cap of approximately $43 billion. HBAR's all-time high market cap was approximately $5 billion. So $1 HBAR is roughly an 8 times ATH market cap expansion, comparable to what $5 is for XLM in terms of the multiple required. At $1, 1,000 HBAR becomes $1,000. 10,000 HBAR becomes $10,000. 100,000 HBAR becomes $100,000. 1 million HBAR becomes $1 million. Now, here's the thing that I think most people who hold both assets have never calculated. If you hold both XLM and HBAR, if you have, say, 50,000 XLM and 100,000 HBAR, which today's prices cost you $10,000 and $7,000 respectively, what does your combined position look like at $1 for each? Asset: 50,000 XLM at $1 is $50,000. 100,000 HBAR at $1 is $100,000. Combined portfolio value at $1 for both is $150,000 from a $17,000 total investment today, a roughly 9 times return on the combined position from a scenario that requires neither asset to do anything unprecedented relative to its previous all-time high. That is the math that I think is most useful for the people watching this video who are building positions across the category. Rather than concentrating in one asset, the combined scenario is more achievable than the $5 scenario for either individual asset. And that is the math that deserves to be worked through properly before you decide how to allocate. Drop in the comments, which tier are you in for XLM and HBAR? And which of these scenarios, $1, $3, or $5, do you think is the most realistic within this cycle? And for HBAR holders specifically, do you think the enterprise adoption story eventually creates the kind of open market demand that closes the gap between Hedera's institutional metrics and HBAR's price? Because that is the most important unsettled question in the HBAR thesis right now. And I think this community has more of an informed view on it than most analysts give it credit for. If this gave you concrete numbers where most videos give you vague hope, hit the like button. It is how this kind of specific, honest, tier-by-tier math reaches people who are planning their financial future around assets they have never fully modeled. Subscribe if you want the analysis that starts with what is actually on-chain rather than with what sounds good. And share this with whoever in your life holds XLM or HBAR and has never sat down and calculated what their specific position is worth at each realistic scenario, because that calculation changes how you hold 16,000 XLM, puts you in the top 1% globally. Now you know what that is worth. Have a great day. If you enjoyed this video, don't forget to like and subscribe to the channel, and be sure to join my free Telegram community with the link on my channel where I post my daily crypto experience. And arbitrage opportunities you can't get anywhere else. This is XRP Hobart signing off.